Hello again. Today is September 30th, and it is time for another investment update. Now, in the month of August, I didn't do anything stock market related because instead I was on holidays, and they were actually a lot of fun. First, I hiked the Hadrian's Wall National Trail coast to coast. It was absolutely spectacular. Then I met some friends in Barcelona. And then I went home to Germany, to my hometown, to meet my mom and friends and grandparents and my cousins. And then finally, I went on our annual family cycling tour along the River Ems, which was also a lot of fun. But now I'm back in Manchester. I have to work again. I'm actually supposed to be in the office, but get this, our building was flooded, so I'm stuck working from home again, although I did remove the green screen, so you can see my bedroom now. Fantastic. But it was an absolutely horrible month, absolutely atrocious performance. I'm down. I don't have a single stock in my portfolio that's in the green. So it's really terrible. So for instance, we have this Evergrande crisis going on at the moment. The second largest property developer in China is threatening to go bust. They have a lot of debt and cannot pay it back. People talk about a recession, and as a consequence, copper prices have dramatically imploded. Here is a chart of the copper price over the last month. It has fallen from a high of 450 all the way down to about 410. And one of the largest positions in my portfolio is Rio Tinto, a large copper producer, and they just got slaughtered. It was brutal. They are down very big. But I do think copper in principle is a good investment. We're going to need it for the economic development of the future. So I do think it's a good development. Just over the last month, it is down a lot. Another bad example is Thor Industries, the producer of trailers. Here's the chart for Thor Industries over the last 5 years, where they're still down 20%. That's very surprising because they actually just had phenomenal earnings. They beat expectations by a wide margin. They were expected to earn $2.91 per share, but actually they earned $4.12 per share. That's a huge beat. And yes, the stock was up a little bit, but not nearly as much as one might expect. So I do think this is actually not a terrible investment, and there is a lot of positivity around the stock, but it just still won't go up anyway, and I'm actually down on it. So another example of a frustrating investment that I was hoping would do much better. So I am deep in the red, which is very upsetting. I kind of sort of saw it coming, I guess, but still losing so much money is not fun. And I'm just hoping that the future will be better. And this is so despite the fact that my sort of macro structural outlook is actually not so bad. So for one, I was thinking that inflation should be a problem. Just now I read an article that said in the Eurozone, inflation is the highest in 28 years and just crossed 4%. I went to the supermarket, to Morrison's, where I got 3 meals for £6. Now it's 3 meals for £7. And inflation is just everywhere. For instance, in gas prices, as you can see here, gas prices in the UK have more than doubled over the last year. And of course, as gas prices rise, you could expect this to have repercussions in the rest of the economy, and a lot of other prices could go up as well. My Starbucks coffee now costs $2.30 as opposed to just $1.90 because global coffee prices have been rising, and it could get much, much worse. Just read these news stories here. Coffee bean price spike. Coffee bean prices have doubled in the past year. A coffee shortage is coming. Coffee prices could be going up at grocery stores, and so on and so forth. So I do think I was kind of right to worry about inflation, and I think it's going to continue and probably even get worse before it gets better.
Around the world, consumers are grappling with the soaring cost of food. Prices now at their highest level in a decade.
Here's the pressure. Steel prices have shot up 130%. The cost of wholesale gas is up 420%. Imported wood up 64%.
A lot of this is the labor shortage, the wage inflation, and wage expectations is the most permanent type of inflation
So what would you expect in an inflationary environment like this? Well, I thought gold prices would go up because people say gold is a great inflation hedge. When there is lots of inflation, gold should do well. And I actually put a lot of my money into gold stocks. At the very beginning of the month, we got a bad jobs report from the US. And for a short while, gold price shot up above 1800 again, but then it just collapsed. And currently we're below 1730, so very low. And that is reflected in my gold stocks. They have completely imploded. Some of them are down 20, 25, even 30%. Those are huge losses for me. It's very frustrating because I wouldn't have expected it. You think inflation goes up, gold should go up. Inflation did go up, but gold has been falling instead, which to me at least is very surprising. The reason why gold prices have been falling is that people think that central banks around the world are going to have to raise interest rates because of all the inflation that has become obvious, and that they are going to tighten. And that in principle should then reduce inflation, and the stock market looking ahead is already anticipating this effect and hence falling gold prices.
The Central Bank of Norway, the Bank of England are all telling you that rates need to go higher because inflation is a bigger problem.
My reasoning, though, is that this is not going to be so easy. You cannot just raise interest rates because there's so much debt in the system, and this is shown here. So debt is just going up and up and up and up and up. And now in the US, they have this new discussion about raising the debt ceiling, which you have to do every so often. Quite sure they will do it. And so we hit more than 25 trillion, going to 28 trillion. So those are staggering numbers. And I don't see this reversing anytime soon. So more money needs to be created, this debt needs to be serviced, and that just smells a lot like continued inflation to me. Here is a graph of the balance sheet of the Fed, which I think should sort of make the same point. So in general, you can see that the balance sheet just goes up over time. In 2014 and 15, they stopped purchasing assets and eventually even shrank their balance sheet a little bit. And this is what market participants expect to happen now. So the Fed should get tighter, they should shrink their balance sheet, or at least not buy as many assets, and that therefore should be bad for gold. But my reasoning is, in the long run, this just goes up. So who cares if they now buy a little bit less or even shrink their balance sheet? In the long run, there's going to be another crisis, another recession, and then they just continue with their quantitative easing programs and buy more assets. So in the long run, I think this graph is just going to go up, and that should actually be very good for gold. So you can also think about all the obligations that governments around the world have. For instance, I'm going to get a pension here from the UK someday, hopefully, and that's all dependent on high stock market valuations. So the money that I pay into my pension every month goes into the stock market where it is invested. So everybody needs stock market prices to be quite high, and that depends on easy money, on easy central banks. So they cannot just all of a sudden tighten, raise interest rates and shrink their balance sheets, because that would create a big financial problem.
If inflation embeds deeper than the bank thinks, that could mean higher interest rates too, and all at a time when the government is about to raise taxes to record levels.
So my view is that they are just going to continue purchasing assets or have quantitative easing, even with pauses, even with some shrinking in between. And so in the long run, over a couple of years, gold prices should go much, much higher. So that's my opinion anyway. Of course, nobody should take my advice. I'm just a nobody. But if somebody did, I would recommend that you buy some gold stocks. Just buy some Barrick Gold or something. I think the upside is phenomenal. So the first thing I did this month was buy some more gold stocks. I put about 500 pounds into Newmont, which is the largest gold producer in the world. And I just read they're actually going to take over another gold company, which makes sense. They're so cheap right now, you might as well buy them. So that's what I did. I bought Newmont for 500 pounds. And then there's the second side of my portfolio, namely value stocks, traditional boring stocks, dividend paying stocks, which I just want to keep in my portfolio for a long time and over time just collect the dividends. And I already have a few stocks like this. I have some pharmaceuticals. I have an energy stock, Iberdrola, which has been tanking as well. Bad investment so far, but they've actually come up with a couple of interesting news stories. The first one is from about a week ago. Iberdrola commissioned Spain's first solar photovoltaic plus storage plant. The second interesting story is this. They are planning to create a hydrogen train in Italy to replace old diesel locomotives, which I also think is a really good idea and very interesting, and I'm happy to be a part of this investment story. Despite these great ideas, Iberdrola, just like all my other investments, is down at the moment, about 10% in my portfolio, but it's still the kind of stock that I am quite happy owning. And of course, I also have one materials company, China Resources Cement, which I think is a phenomenally profitable company, very solid, very good, but also down very big. So I thought, hey, what else should I invest in for this sort of value component of my portfolio? And I thought I want some telecom. So I went through a long list of potential telecom companies, British Telecom, Verizon, Orange, Comcast. But in the end, I decided on a different company. The telecoms company that I bought is Telecom Austria. As is so often the case, all of these companies within one sector were quite similar, but this company just seemed slightly better, slightly lower PE, slightly higher dividend, currently 3.3%. And also what I liked about this company is that they have great potential to invest in Eastern Europe and expand in the Balkans, because there's still a lot of people who need smartphones and 4G and 5G networks, which Austria Telecom is in a great position to provide. Right, so there you have it. Those are the two companies I invested in this month, about £500 each, £500 into Newmont Mining and £500 into Austria Telecom. So despite the fact that so far my approach hasn't worked at all and I'm actually down quite big, I would nevertheless like to continue with my strategy. So that means I would like to buy more commodities that I think might go up because of inflation, like nickel and cobalt and lithium and silver, or maybe just some more gold stocks. And on the other hand, I would like to expand the value side of my portfolio, maybe buy more renewable energy companies or materials industrials or some more pharmaceutical companies or something like that. Right, so I'm looking forward to giving another update on my portfolio in October next month. It might be a very challenging month because I've heard lots of market commentators predict that there might be a correction or more downside for stocks, so we'll see.
I think you'll see a sell-off in the S&P 500 if rates go to 2%.
My story is going to remain interesting and exciting, so I make sure to make another vlog soon. Until then.